Broadcom Incorporation is a global leader in both semiconductor and infrastructure software solutions. The company operates across critical markets, including cloud computing, data centers, networking, and cybersecurity. Broadcom stock has been a strong performer in recent years, reflecting robust earnings growth and investor enthusiasm for its role in surging AI and 5G arenas. The company has built a formidable position through cutting-edge chip technologies and strategic acquisitions. This analysis will examine Broadcom's market position, growth prospects, industry tailwinds, and key investment considerations, ultimately answering the question, should you consider buying Broadcom stock now? Let's dive in. Broadcom has evolved into one of the world's most diversified tech companies. On the semiconductor side, it provides essential components powering networking equipment, data centers, broadband infrastructure, and smartphones. Its infrastructure software arm, expanded by acquisitions like CA Technologies and Symantec's Enterprise Security Division, contributes steady, recurring revenue from mainframe and cybersecurity software services. This dual business model gives Broadcom resilience. When hardware markets face cyclicality, software revenues help stabilize the company's overall performance. A cornerstone of Broadcom's strategy under CEO Hock Tan is growth through acquisition. The most notable recent example is the $61 billion purchase of VMware, a leading cloud and virtualization software provider, which closed in late 2023. Integrating VMware further cements Broadcom in the enterprise IT stack, allowing it to offer the hardware that moves data, as well as the software that manages and secures it. Broadcom's sheer scale and broad portfolio also create high barriers to entry for competitors. It holds leading market share in niches ranging from data center ASICs to smartphone radio frequency chips. These competitive advantages have translated into robust financial performance. Broadcom hit a record $51.6 billion in fiscal 2024 revenue, up 44% year-over-year, underscoring the strength of its market position. With this strong foundation in place, Broadcom is positioned to capitalize on multiple growth opportunities. Broadcom's growth story is tightly interwoven with some of tech's biggest trends. Foremost among these is the artificial intelligence boom. Broadcom is seeing surging demand from cloud giants for its custom AI accelerators, an alternative to NVIDIA's GPUs in certain workloads, and even OpenAI is reportedly partnering with Broadcom on in-house AI chips. This focus on AI hardware is already paying off. Broadcom's AI-related chip revenue jumped 220% in 2024 to $12.2 billion, and management forecasts about $4.4 billion in AI chip sales for the upcoming quarter. Beyond AI, the ongoing rollout of 5G networks and the expansion of the Internet of Things are also fueling demand for Broadcom's wireless and networking chips. Each new generation of smartphones and smart devices requires advanced connectivity components, a domain where Broadcom remains a leader. Another pillar of Broadcom's strategy is its push into enterprise software and cloud services. The VMware deal opens cross-selling opportunities between Broadcom's existing infrastructure security software and VMware's huge customer base, positioning the company to benefit from the hybrid cloud trend. Broadcom's hefty free cash flows, over $21 billion in fiscal year 2024, also give it flexibility to invest aggressively in R&D, fund further acquisitions, and reward shareholders. In short, Broadcom is positioning itself to ride the tailwinds of AI, 5G, and cloud computing through both organic innovation and strategic acquisitions. Importantly, these efforts are bolstered by broader industry tailwinds. The broader semiconductor industry is riding powerful tailwinds that work in Broadcom's favor. The proliferation of AI, machine learning, IoT, and automation across sectors is boosting demand for advanced chips. At the same time, the widespread rollout of 5G networks is accelerating the need for networking gear and ultra-fast data center connectivity, another boon for chip makers like Broadcom. In essence, as more devices and services become smart and connected, companies supplying the enabling hardware stand to benefit, and Broadcom is at the center of this trend. Notably, Broadcom isn't just riding these waves, it's helping drive them. The company is a pivotal supplier for cloud providers building out AI infrastructure, with multiple hyperscalers now co-developing custom chips alongside Broadcom to meet specialized needs. This industry shift toward tailored silicon solutions plays directly to Broadcom's engineering strengths and close partnerships. Additionally, Broadcom's move into enterprise software aligns with businesses' demand for integrated hardware-software solutions in areas like networking and security. As companies invest in digital transformation, Broadcom's ability to offer both critical silicon and supporting software positions it uniquely well to capitalize on that trend. At the same time, investors need to assess how Broadcom's fundamentals and risks stack up. From an investment perspective, Broadcom offers a mix of strong fundamentals and some cautionary factors. On the fundamentals side, the company's financial performance is stellar. Broadcom has delivered rapid growth while maintaining hefty profitability. Its adjusted EBITDA margins are around 66%. The firm's prodigious cash generation also supports a generous dividend that it consistently increases. The payout was hiked by 11% for 2024. These qualities make AVGO attractive for investors seeking both growth and income. However, there are notable risks and considerations to weigh. One is customer concentration. Apple Incorporation accounts for roughly 20% of Broadcom's revenue, and Apple plans to replace Broadcom's Wi-Fi Bluetooth chips with its own designs by 2025. Losing that business could dent Broadcom's future sales. Analysts estimate it might reduce Broadcom's revenue by about $1 to $1.5 billion annually. Another risk is the execution challenge of absorbing VMware. Integrating such a large acquisition and achieving promised synergies without alienating VMware's existing customers will be a delicate balancing act for management. Valuation is also a consideration. Broadcom's stock price has climbed sharply, leading some analysts to warn that it's priced for perfection at current levels. Yet, Wall Street's overall stance remains upbeat. Many analysts still rate AVGO a buy, reflecting confidence that Broadcom can continue to grow into its valuation. As an investor, it's important to ask whether Broadcom's growth trajectory will be strong enough to justify its premium pricing. Broadcom stands at the forefront of several high-growth tech themes and has proven adept at executing to maintain its leadership. Its diversification into software and its focus on opportunities in AI and 5G have set the stage for continued success. That said, investors must be mindful of potential headwinds, from the loss of Apple's future business to the challenges of integrating VMware. So, is Broadcom a buy right now? If you believe the AI and connectivity tailwinds will persist and trust Broadcom's ability to execute, the company's long-term prospects make it an attractive play. However, if you're concerned about its valuation or near-term bumps in the road, you might prefer to wait for a better entry point or more clarity on those risks. What do you think? Will Broadcom stock keep climbing on these tailwinds, or do you see its upside limited by the challenges ahead? Share your thoughts in the comments below. If you enjoyed this analysis, please like the video and subscribe to Stocks Telegraph for more stock insights. Thank you for watching, and don't forget to hit the notification bell so you never miss an update. See you next time.